clearly, trade weighs on the minds of all these different thought leaders gathering in Beijing. And for the markets, it seems to be the only catalyst that can give us any kind of meaningful move or break out of a range. U.S. equities are at record highs, but have been kind of stuck here all week. Treasury is certainly in a range as well. And Katie Greifeld was just telling us about the dollar and its narrow moves this year. What kind of news on trade would move us decidedly to the upside or to the downside to get us out of this rut?
I think you're right. I think the market is very focused on trade, but even stepping back from trade, we've had an environment where we've really been in the middle of a trade dispute for much of this year, and despite that, we've seen equities hit new highs. We've seen, the bond market rally as well. So when we're looking about how we're investing, we're looking and trying to cut through some of the noise on trade and look at what the fundamental underlying trends are within stocks and bonds and the overall economy. That said, I think going forward, right now, the market is expecting that we're not going to see further escalation in terms of trade tariffs between now and year end. And whether or not that means that Trump and China sign some type of narrow or mini deal, or if those tariffs are extended through and no further escalation is hit on the December tariffs, and that's potentially punted into next year, I think that the market is looking for some bullish signal that things aren't going to get worse and that we're not going to see further deterioration in trade talks between the U.S. and China.
And so, Erin, does that carry the benchmark stock markets higher? And if so, what sort of industries, what kind of companies lead us there?
Yep. So I do think that certainly if we were to see some type of deal signed, at this point, I don't even think that the market is parsing too closely to the details of what that deal means, but they just don't want to see further escalation. So if we were to see some type of deal signed where the tariffs, potentially some of the tariffs roll off from the existing tariffs put in place, I do think that that would carry the market higher to new highs. With respect to what would do well in that environment, I think you really need to look at the cyclical sectors within the economy. Certainly those sectors are the ones that were hit hardest on the back of trade, particularly with CapEx declining and many of the areas where trade was most focused was regarding some of the more cyclical sectors within the economy. So I think industrials would do well in that environment. Certainly if you were to see China make agreement to purchase different agricultural or commodities, that would also, I think, do well for those sectors. The autos as well, given that they've been in some ways caught in the trade war, not really with respect to China, but with broader USMCA as well as with Europe. But the cyclical sectors, I think you've started to see some life over the last 2 to 3 months with outperformance relative to the defensives, and I think that you would expect to continue to see the cyclicals outperform defensives on the back of any type of amelioration with regards to U.S. China trade.